What's going on, everybody? KEVINCAGE here with a huge crypto update today. So this is a recording of an X Space that I hosted last night with Jim Bazzani over at Caleb and Brown. So we dive into a wide range of topics, including the $1.2 trillion crypto crash, the liquidation spiral that we've been seeing. We go over QT and QE by the Fed along with previous bull runs, RWAs, regulation, and so much more. Did my best to place some charts and articles on the screen during our talking points, so be sure to stick around, and my goal here is to cut through all the noise in this space and get right to the info. And friendly reminder, nothing shared in this video is financial advice. I might give my opinions in this one about the market, but nobody knows. Does Bitcoin go to 30k? Does it go to 200k? Or does it just range? We're in unknown territory considering macro events, AI, geopolitical tensions, and tariffs, so absolutely anything is possible, both the good and the bad, and I continue to be a long-term investor. I also have Caleb and Brown linked in the top of this YouTube video description for anybody that wants to get started, so I've been using them for almost 5 years now. I absolutely love the ability to set extremely low limit buys and high limit sell orders. That alone is extremely valuable in today's market because this environment, we are seeing cascading liquidations, this feedback loop of a liquidation spiral, and that's creating some huge flash wicks. And I hope the audio quality is okay in this recording, guys. I did record this off my phone and I've been busy working on a property for tenants, so apologies if my audio is a lot louder. But without further ado, let's dive right in.
Jim, how you doing?
Kevin, I'm well. How are you?
Good. I think you're in Melbourne, right?
Correct. Yeah. So it's about 10 a.m. on a Wednesday here. What's the time where you are?
Yeah. I am 1900, so 7 p.m. I'm at AST, so I think you're 15 hours ahead.
Yeah. Yeah. I'm in the future.
I'm jealous. Yeah, I've had a long day. I've been going for almost 12 hours, so I'm ready to take a hard nap after this.
Oh, wow. Well, at least we've got something a bit more positive to talk about today than what I was planning that we would have to talk about over the last few days. It's been a nice little rebound that we've seen sort of in the last 12 hours, which has been good.
Yeah, no, it's been wild. All the cascading liquidations. I was reading a bunch of articles about that, and gosh, some crazy flash wicks.
Yeah. Yeah. Just the volatility. I mean, we could talk about it once we get started, but it's so volatile now. And wild swings, both positive and negative.
Oh yeah, yeah. We'll get started in like maybe 1 minute. I'm not expecting a huge turnout based on the market, but we're going to dive into some interesting things. Another thing that I thought was notable was as of yesterday, the Fed ended their QT, their quantitative tightening. So basically setting the stage for QE this upcoming year.
Yeah, I think that's a really big one. And we're starting to see macro have a really large impact on how the markets are impacted in crypto. And we've been in QT for pretty much this entire sort of 3-4 year cycle, which hasn't really happened before. So I think at this stage, I don't think QE has necessarily been announced yet, but I know that Trump's hinted at it in a variety.
Right. Yeah, they've ended the QT, which is the basically. Sorry, you were cutting out. I definitely interrupted you.
That's okay. I might need. Give me one.
But yeah, I was looking at the dates of all the previous big pushes for QE with QE 1, 2, 3, March 2020. So in my opinion, it's just a matter of time for the next big QE. And that was exactly what set up our bull run in March 2020.
Yeah.
And then they started, I think they ended it or began tightening maybe around March 2022 or maybe end of 21. So it's very aligned with risk on assets. I mean, I know you know this.
Yeah. Yeah. It's especially, can you hear me better now, by the way?
Yeah. Yep. Perfect. I'm ready to read off a quick little intro and we can dive right in.
Yeah. Let's
just have a fun conversation.
Let's do it.
Cool. Good evening, everybody. Thank you for tuning in. It is December 2nd, and we've got a big space tonight. And I think it's pretty obvious the last 6 weeks in crypto, even 7 weeks, have been absolute chaos. We've seen over $1 trillion get wiped out, a variety of liquidations or cascading liquidations from deleveraging. We had Bitcoin reach an all-time high of 126K, and since then, we wicked as low as just under 81,000. We have a bunch going on, even record outflows for ETFs. So we're going to break it all down today. And to help us make sense of all of that from the institutional side of things, we have my buddy, Jim Bazzani, who is head of partnerships over at Calvin Brown. So Jim, how you doing tonight? And let's dive in.
Yeah, thanks for having me on, Kevin, and thanks for everyone that's jumping in and listening right now, and for those that are listening after the fact. As Kevin said, it is a very interesting time in the space. Obviously, we haven't had a great, probably 2 months of October and November. So we'll talk a bit about why that's maybe happening. Not all of it is really to do with crypto and the market, and I guess the developments we've seen. But there's certainly reason to be optimistic, as we'll mention throughout this call, for the future. But also, we want this to be interactive. So Kevin and I will be talking about a range of topics. But please, if you've got a question or you want to, make a comment, just I guess I don't know how it works necessarily on
Yeah,
space.
just
Request to
request. Yeah,
speak, and
request to speak.
yeah. So excited to be here. And as Kevin said, I am from Calvin Brown. We might spend a little bit of time at the end just explaining what we do. And if anyone on this call is interested to learn more, please feel free to reach out to my Twitter, and I'd be happy to help out. But yeah, thanks for having me on, Kevin. And where do we want to get started?
Yeah, let's get started with the obvious because I really want to cut through a lot of the noise and just kind of talk about what we're witnessing and what that could mean for the future. Let's just start off with the overall bloodbath that we've seen over the past 6-7 weeks.
Yeah, it's been tough. It's been tough. So we've had about, I think it's around 1.2, 1.3 trillion in the crypto market cap. It's been wiped out in a pretty short period of time, or around 6 weeks. It's probably less than that after sort of the rally we had last night of about 8% within the market. But naturally, this is a very big loss for the crypto space. I think it's about 1/3 or 1/4 of the total market cap has been wiped out in a really short period of time. And there's a range of reasons for that. Although what I would say is that it really hasn't been, unlike other drawdowns, a fundamental difference in the optimistic levels of crypto and what's happening from a legislative perspective, what we're seeing through on-chain metrics. It was largely driven by macro. We've seen a lot of uncertainty around US stocks, especially AI and tech stocks. And through that, crypto is still seen as the high risk asset in all of it. And through that, people sell off their high risk assets first in a period of time where there's a level of uncertainty. And so certainly from that, we've seen crypto suffer from a lack of confidence in the overall macro environment. Unfortunately, we are still susceptible to that. But certainly, as Kevin mentioned, there's still a lot to be optimistic about. We just saw that the QT, or quantitative tightening, we'll also expect rate cuts again by 25 basis points on the 9th next week. So there is still reason to be optimistic that we're in an expansionary environment. But certainly, there's no beating around the bush. Crypto has suffered, and we've seen altcoins especially really have significant drawdowns over the last 6 weeks. But that's my sort of initial brief on it. Kevin, what are your thoughts on it?
Yeah, no, I agree. And if you look at even Bitcoin dominance, so for anybody listening, for the last 2 cycles in 2017 and 2021, when Bitcoin dominance crashes, large sizable crashes as Bitcoin, BTC USD goes up, those were the alt seasons. Bitcoin dominance has been going sideways at like 59% for probably the last 50, 60 days. So it hasn't moved as Bitcoin goes down. So what happens is all get hit the hardest, and I don't know the pure reason for this. This is just the relationship we see, but we've seen a lot of liquidations, and like you said, this was macro driven. This wasn't some exchange like FTX collapsing. There wasn't some major hack. It wasn't necessarily crypto's fault, but we're in a world where crypto is, I guess, being a lot more correlated and tied to these macro factors. I've seen things related to rising bond yields, a lot of people de-risking, and then in the future, even ETF outflows will affect this market to some degree.
I think you hit the nail on the head there. Industry is maturing, and it's a great thing for this space. It's almost like the crypto space is becoming a bit more financialized, in the sense that we now have ETFs, which are great for inflows, but it also...
I'm losing you, Jim, unless it's just me.
Yeah, can you hear me now?
Yeah.
Okay. Okay. Sorry all. It's a few technical difficulties here. And just let me know if I drop out again. It's yeah. Hopefully you can hear me loud and clear.
Yep, you're good
What
now. Yeah, I lost you for about 30 seconds, so feel free to continue where you left off.
Yeah, I was just trying to think about where I left off. I think what I was essentially saying is that with the introduction of ETFs and a lot more institutional trading avenues for people to get exposure to crypto now, it's becoming more and more of a financialized product, which has a lot of benefits. And it means we'll have a lot more of larger entrants into the space. But it also means that when there is uncertainty, and they may be holding crypto on their balance sheet, it's probably the first thing to go because it's seen as still the most risk on high beta asset. So that's a big impactor on volatility. Another one that I know we've spoken about before, Kevin, and one that I'm certainly noticing now in this cycle compared to say 2021, where it wasn't anywhere near as rampant, is the ability for people to trade at leverage and have far greater accessibility to greater leverage. So, the main two that I'm thinking of right now is obviously Hyperliquid. Asta's one that got released recently, where you don't even need to KYC as a retail investor, and you can put on 50x, 100x leverage positions. And so what we're seeing is that a lot of the volatility is coming from those cascading sell events where people have a lot of leverage on, and the market moves swiftly one way or another, and that forces people to sell. And what that does is it forces sell pressure into the market, which in some respects is healthy. You're flushing out the leverage. But what it also means is that this structure and this overall market is way more fragile than we've seen in other bull markets of 2021. And it means that while we still want fresh capital coming in, there is so much forced selling pressure that it results in these cascading sell events of we see reduction in prices quite quickly. So that's a really big impactor as well that we haven't seen in previous cycles that has become more apparent, certainly in 2025.
Yeah, that's really well said. I've looked into Aster a bit more with all the Binance involvement. But like you said, like related to cascading liquidations or what they call a liquidation spiral, they can go down, they can also go up. Now, in this case, it's like crypto's being seen or being more affected by macro, just macro factors. And because of that, some spot holders might be withdrawing or selling, even with, other tech stocks taking a hit. And then from there, that can affect anybody in these positions that are over leveraged. So if the price drops a bit, it hits that investor. They might completely, have a margin call and be forced to liquidate out of losing positions or completely. And then all of a sudden the price drops even more. And that affects the next person and the next person. And that's where we can see that high degree of volatility. Just explaining to listeners.
Yeah, and then the other element of it is that, look, unfortunately, we still have a lot of people that are relatively new to this space, which is a great thing in a lot of ways, but it means that a lot of the time they're just tracking the price performance and they're seeing, significant drops in price and thinking there's actually something wrong with that particular asset or industry. And that's ultimately then when you have issues where people are then selling, thinking that the market, there's something wrong with it. When really it's just, there's nothing structurally wrong. It's just to do with these liquidations that are occurring due to just people being over leveraged. So certainly something that I always stress with our clients at CNB and really just friends and family as well is if you are going to trade crypto, it's probably safer to do so through spot. Very rarely do leverage positions work out, and they certainly can. But I think it's probably better for the more advanced traders that actually have their finger on the pulse of these things. And even they, if we look at the October 10 liquidation, most people that had leverage positions on were liquidated quite significantly. So best practice is usually always to just buy spot and buy assets that you have high conviction in.
Yeah, I agree. I think a lot of new investors that might not have experienced a previous cycle all the way through, if they're, holding some altcoin and seeing it dump, I mean, we have to understand Bitcoin crashed from 126K down, and I think it's down almost 30%. And from there, Bitcoin dominance stayed the same. And this is not just a single asset dumping. This is the market as a whole. One thing I'd be looking forward to in the future is when we can expand the monetary policy, which historically has led to these liquidity cycles. And we could even see the opposite of what we're seeing today, where there are short squeezes.
Yeah, and that's the benefit of leverage the other way, right? We haven't really experienced that too often here recently, but
No.
that's where leverage can be positive for your assets as well. And that just speaks to this asset class in general. And I think we all know what we're getting into. This is just an inherently far more volatile asset, which is very positive and has been for many years for many of us. But it also can be on the downward trend as well when there's too much leverage the other way. So, as you said, Kevin, I think if we can get better policies, get more liquidity into the market, we'll start to see further inflows. We're still seeing inflows come through and demand come through from new ETFs. So, the XRP ETF that launched the other week actually had an amazing day of inflows to begin. But unfortunately, I'd say sort of Bitcoin, given it's the most mature ETF, has been a pretty good signal of general liquidity and demand in the market. And there was almost 900 million in a single day back in a few weeks ago in November. So outflows, inflows of ETFs are a really good indicator for most investors to be tracking. And then there's a range of other QE factors and macroeconomic factors that they should be across as well.
Yeah, you couldn't name a better time for XRP to go live with these spot ETFs right when the market's crashing.
You're never going to be able to time it. It's like all those airdrop, all those protocols that are trying to time their airdrop, and you can just never get the right date to get it done. So it's just good that it's in the market. It means there'll be more institutional adoption for XRP ETFs and XRP in general. And I think it's overall a really positive thing for the market because there are a lot of investors that want exposure to XRP, but probably aren't comfortable buying the underlying asset at this stage.
Yeah, I find it interesting because there's some really big issuers, and not just for XRP, but like the Franklin Templeton is an issuer, approximately has like $1.5 trillion in AUM. And now when I'm tracking XRP's AUM with its spot ETF with Franklin, which is relatively new, it's only 2 million. It's absolutely nothing. So hopefully that can grow in the future. I assume a lot of things turn around, if we get that liquidity cycle with QE.
Yeah, and what, in your opinion, what do you think with QE? Like, I've heard Trump talk about with the tariff revenue they're generating, that they're going to give out sort of a stimmy, in the lack of a better term, to a lot of the US citizens. What would you sort of view as sort of key QE mechanisms that could actually provide greater liquidity, not only into the crypto markets, but other asset classes as well?
Well, I've heard Trump even last month or recently say with the tariffs, his goal would be to get rid of federal income taxes or at least cut them, which would be great. I guess looking in the past at the different QE cycles or even last cycle, during 2020, we had interest rate cuts, we had monetary printing. I'm not sure what the Fed was buying, if it was treasuries, but I know that I just saw an article. Let me pull it up here on Yahoo Finance, and this was dated today. The US Fed ends QT, which is tightening the monetary policy, with $13.5 billion liquidity pump. So I assume that we're going to see a lot more of that in the future because the system just can't continue without liquidity. So I would hope to see QE announced in the next 6 to 12 months and really turn this around. I'm trying to think. I'm losing my train of thought.
Yeah, and I think, based on that point, just sort of as you're thinking about some other ones, a lot of our clients recently, we've spoken about the 4-year cycle for really probably the last 3-4 years, and what that has now meant moving into sort of the end of 2025, and we're not really at the levels that we had envisioned, given that 4-year cycle, and obviously the 4-year cycle is based on the halving of Bitcoin supply and is really dictated on Bitcoin's price, with the idea that Bitcoin leads the way. And this is what usually has happened in other bull cycles in terms of price performance. Usually is the most dominant asset. But then, as Kevin said, that's when people take profits from their Bitcoin, and that then flows into altcoins. Then we have that quote unquote altcoin season. Now we're clearly shifting away from that. I think that's no longer going to be the case, where it's going to be done on sort of time horizons. And certainly it's more important to be looking at what is actually happening in the macro environment, what is happening in relation to liquidity in the market, both from interest rates, which I think we're starting to see become more favorable for crypto, But even just things like stablecoin inflows, how many people are holding stablecoins. As Kevin said, if they're providing stimulus packages to US citizens, that usually gets invested to risk on assets like crypto. These sorts of trends are worth following. But ultimately, that doesn't necessarily mean that, okay, we're breaking away from the 4-year cycle. It doesn't mean we can't have an expansionary 2026. We were always going to probably break away from the 4-year cycle at some point. And certainly this cycle, as we've mentioned, is very different in a lot of ways, but none more so than probably the institutional adoption we now have in 2025. But that ultimately means that we are impacted by what actually happens in the broader economy more than we were probably in 2021, when it was really just a bunch of us interested retail investors that were buying and selling and holding crypto because we actually understood it, at a deeper level. But we're probably larger holders than, or more convicted holders than, say, some of these larger institutions today.
Yeah, well said. Yeah, I mean, again, I'm very bearish on the US dollar long term. So whether they, do QE or not, I want to hold assets. Maybe not all in crypto, but I'm still going to be holding a significant portion. Even I did a video, I think in January of 2024, and this is not financial advice to anybody, but I expected us to have another cycle, and by end of this year at the latest, that Bitcoin would have risen to at least like 150K to even 250K. We haven't seen that rise. Monthly RSI hasn't climbed, and we're not in the same position as we were in 2020 just yet, but I still believe in that potential. So I guess the question is, do we crash and have a bear market, or do we get a V-shaped recovery sooner? So that's my expectation for the next 12 months, because I believe that another cycle, because Bitcoin dominance has not crashed. If it crashed and we didn't see an alt season, I'd say, I'm wrong. But as far as I'm concerned, these cycles are just kind of getting longer. They're dragged out. And there's a million other things to consider with AI. And I guess we can pivot into regulation. Because I think I mentioned the Clarity Act to you, and just considering that, since we did just have the Genius Act come out this year.
Yeah, I mean, and that gets to the point that I tried to make at the start around, look, we've never been in a better space in the crypto space for adoption, for regulation, for clarity. Obviously, we've got the Clarity Act, but genuine clarity for businesses that want to get exposure to crypto, hold it on their balance sheet. Obviously, the Genius Act is great for stablecoin adoption for a lot of these tech and payment provider businesses that really want to start using this technology, but need a clear legislation around how it will actually work. But also these stablecoins that they may be using, how legitimate are they? They need to show their proof of reserves, etc. So the Clarity Act is one that I think is perfect, because we've seen, ever since the Gary Gensler days, that the SEC has taken quite a aggressive approach when it comes to suing crypto businesses without really collaborating and working alongside of them. So I think it's positive that it's probably shifting towards more of a focus of the CFTC moving forward, and it makes more sense for it to fall under them, just given that most cryptos aren't actually considered to be securities. So I think that is a really positive act that hopefully will get passed pretty soon. It may not be until 2026 where it's fully implemented, but what you'll find is this will provide a really great runway for governments in other areas like Australia, like in Europe, to look at this legislation and use it as a bit of an example of how they should then regulate crypto in their industries as well. Because whilst the US is one of the larger markets for crypto, it's certainly not the only market. So I think the Clarity Act's a really great one. And honestly, it's been pretty impressive to see Trump put his money where his mouth is when it comes to actually putting legislation in place to propel this industry forward instead of trying to restrict it.
Yeah, like you said, so we had the Genius Act, federal framework for stablecoins. That's step one. With the Clarity Act, that's basically going to be dividing the jurisdiction between the CFTC and the SEC. So I'm biased. I don't like the SEC, but I'm sure that they're going to go after a lot of projects and still argue with the CFTC what's an investment contract versus a digital commodity. But I really hope that a lot of blockchains or networks that have utility, a protocol function, and are decentralized are regulated as digital commodities. Because we know how
Yeah.
Bitcoin, Ethereum,
Yeah, absolutely. And XRP, right, like had to go through the ringer of actually going to court over this, and at least they
Hmm.
have they probably have the best clarity now of any project and asset because they've actually got a legal ruling on it. But I think, as I said, this is important because even in Australia, crypto right now isn't defined as a financial product, which causes difficulties for businesses like ours because most of our brokers actually have the licenses to provide financial advice, but because the asset itself hasn't been defined yet clearly enough, it doesn't actually fall under the legislation or framework that you can actually provide financial advice on it. So I
Hmm.
think we're getting there when it comes to getting more of an understanding of what these assets are actually defined from a legal perspective, and will ensure actually greater protection for everyday consumers in terms of the businesses and exchanges and platforms that they use, because we'll have a greater understanding of the assets themselves that they offer and what they can ultimately offer in terms of a service. So we welcome it, certainly. One of the more interesting things on our end is just working through, on a state by state basis, all the licenses that we require. And I think that won't change, especially probably from a US perspective, because so much is done at the state level. But it also just leads to inconsistencies around one state to another in terms of the processes required to operate within them. So I think having this Clarity Act will provide that level of uniformity, at least at a federal level, that hopefully then may shift the stance and thinking that a lot of states take when it comes to licenses for US businesses as well. So I think all positive things. We've seen a lot of crypto businesses succeed and start to do well. At the equity level, which I know you've listed here as well. So I think we've got a lot of really positive developments that are occurring in crypto, and that's why sometimes it's quite frustrating to see the price go, the complete opposite way, because we've had such an important year when you think about the overall context of this industry.
Yeah, agreed. And just thinking about recent news throughout this year, we've had Robinhood join the S&P 500. We had Coinbase. We had Circle raising, I think, like $1 billion in an IPO. We had Kraken filing for an IPO. We had Ripple, the company, valued at $40 billion. This space is here to stay. And, we have the Clarity Act, and I hope it actually passes in the future. But in my opinion, there's still going to be a bunch of complexity, and it'll set the stage for RWAs, or tokenized assets, because I want to reach those BCG valuations of $18.9 trillion by 2033. And I think there's still going to be a million more things that are going to slow us down in terms of regulation related to custody, infrastructure, et cetera.
Absolutely. Absolutely. I think that's a really big component of it as well. And ultimately, the best way I like to think about it is, look, we have some clear use cases that I think have product market fit. I think DeFi is clearly here to stay. A lot of people are able to earn yield on their assets, and do things with their financial assets that you just simply can't do in the traditional finance world. So I think DeFi is a huge one. Stablecoins are clearly a massive use case, and we're starting to see that adopted at a government level, at a federal level, at the largest businesses around the world clearly have pushed for the Genius Act because they want to start using it within their operations because it's far more cheap, it's cheaper, it's more efficient. But I think that the next one is probably RWAs, and the industry is still so it's still so nascent because a lot of it is still trying to figure out what are the actual real products that can provide value here. I think long term everything will be tokenized. But I certainly think RWAs are probably the biggest watch in terms of, okay, what's that clear sort of third use case, product market fit within the market that will really drive this forward? We are still very early to RWAs, and often our clients are asking us, well, can you list equities and gold and silver and what have you? And at this stage, we're purely spot crypto. But there's no doubt in the future you'll be able to do that through RWAs. Like there's no doubt that stocks will end up being tokenized. So there's a world in which that just opens up possibilities and doors for investors as well that are either crypto native or not. But I think RWAs are definitely a wait and see. But as you said, like we'll need the regulation for that as well. We'll need the understanding of what can be tokenized, how will it be tokenized, how will it be protected, etc. So I think we've still got a long ways to go with a lot of the technological advancements in this space.
Yeah, absolutely. I mean, I'm wondering, I mean, I see the Clarity Act potentially getting passed. I guess there's still gonna be so much feuding between it because some of these assets, I mean, there can be profit sharing, there can be equity, there can be debts, and I just feel like the SEC is going to try to take over like usual.
Yeah, I think what will happen is it'll be decided upon on like sort of a very basic use case to begin with, and then sort of flow out from there. But as you said, there's so many intricacies around. Well, I could tokenize a property where there could be thousands of people owning this one property, and then what if I want to stake out or lend out my equity in that to someone else? They are essentially then the owner of that property, but it's tokenized. And then, is there a DAO for that property? How does that work? So I think it'll open up a lot of doors for new investment opportunities that we haven't really been able to experience today. But with no doubt, there'll be more complexities around how do we actually regulate this. And yeah, I'm not too sure if that'll be an SEC area focus or a CFTC or maybe a completely new body altogether. But what is positive about is that the US has come to the table, the US government, to actually think about these issues and provide a meaningful way for people to actually use these use cases in the future.
Yeah, absolutely. Let's see. What else can we talk about? If anybody has any questions or just wants to chat, feel free to raise your hand.
Something that hasn't been discussed that I thought I'd just quickly mention that because I think it's an important point, and this is more to do with a lot of this discussion has been macro has impacted crypto, and that's certainly the case. An interesting trend that we've noticed, and I've noticed just on chain, probably over the last 3-4 months especially, is that a lot of one of the more impressive, I'd say, statistics about Bitcoin over the last 5, 6, 7, 8 years is that a lot of the biggest holders of them have continued to hold them. And so the largest, what we kind of call Bitcoin whales, have held their positions even in, say, 2021, where it went up a significant amount. And a lot of those people didn't sell. Now, that's actually changed in this cycle. So if you look at the on-chain data, and there's a lot out there that you can look at in terms of Bitcoin whales, and we're talking about people that are buying Bitcoin back in 2011, when it was $10, a lot of them have actually sold this cycle. And I think part of it is probably just that psychological price of 100K. It's hit 100K. They're in paper profits by significant amounts. And a lot of them actually started to sell Bitcoin. And so that actually brought about a lot of probably unpredictable sell pressure, or not necessarily to be expected sell pressure. And given that these are whales, these are significant amounts of Bitcoin that were being sold into the market. That has slowly started to stop within the last month or so. But that was a very interesting on-chain data metric that we hadn't seen in the past. A lot of these whales are Bitcoin maxis that will hold it to the end. And I have no doubt they will probably repurchase in again. But that has forced a lot of sell pressure on Bitcoin, especially, and was probably part of the reason why we got to, we hit 125K and all of a sudden it was like, well, can we hit 150K here? Like, is this something that can jump up really quickly? And we found that as soon as it hit its all-time price, it kept getting resistance and it kept getting sold down. And that's probably one of the key reasons why. So hopefully that trend now will reverse. And a lot of those long-term holders will become net buyers again. But that was an interesting metric that I thought was probably impacting the price of Bitcoin or its ability to continue to rise past its all-time high.
Yeah, that's interesting. I didn't even consider that.
Yeah, it's definitely a more unique metric, just given most Bitcoin maxis are holding it till the end. But clearly around that 100K mark was a psychological metric for a lot of people, and that's where they decided to then start to sell.
You know what's crazy? I was looking at silver and gold going on an absolute tear, and I noticed that silver's market cap was about 3.3 trillion, and that's larger than the entire crypto asset class today because we're just above like 3, which is just mind-boggling.
It's yeah, that is mind-boggling. I didn't know that. That's an insane
Considering
metric.
gold is at like 29, 30 trillion, so it's just wild. That's why I want to see some RWA legislation, get this Clarity Act out, and start getting real clear guidelines so that we can start tokenizing RWAs with confidence.
Absolutely, absolutely, and that's part of our innovation as a business moving forward. It's interesting how the perspective over the last 12 months is people just want to do more and more with their assets. They don't just want to hold them, and I can understand why that's the case. So we are looking into RWAs certainly once we get more clarity on that. But even just the ability to stake assets, a lot of people want to lend out their assets or loan them out, which I think is interesting. Obviously, there's associated risks with those involved, but I think that just speaks to how quickly this space is innovating. Obviously, these things have been around, especially on the Ethereum blockchain, for quite a while now. But given that we have a lot of interest in, say, other assets that maybe aren't natively staked, like XRP, even those XRP holders are looking at, well, how do we actually earn a yield on this? Can I lend out my assets and earn a rate? People want that flexibility, and that innovation will only continue to drive moving forward. So I think it's an exciting time. I'm probably more of just a spot holder and hold what you think you have conviction in. But certainly people want that flexibility. I think it's important that the industry continues to provide that in a safe manner.
Yeah, we're definitely going to see it in the future. I mean, thinking about even a Fidelity brokerage accounts where you can just take a collateralized debt position. I just want that to be widely accessible for not just Bitcoin in the United States.
Yeah, but with that probably comes the educational side, which is what we try and really help our clients with as well, is around, well, what are you actually doing here? A lot of people like to jump into things, which is great. But what I would recommend is if you are jumping into something that is collateralized or there's a loaning element to it, at least understand it to an agreed degree, and probably don't put in your full allocation. Obviously, that's probably pretty obvious advice, but we have a lot of people that like to jump into things. There's always going to be risks associated when you earn a yield on your assets. And the crypto is still the Wild West. Obviously, as Kevin said, we're hoping that there'll be further regulation that will protect consumers long term. But we are still in a phase of a lot of businesses trying different things to try and satisfy that demand within the space. But there are certain risks associated with that as well.
And random question, how many assets are available on Caleb and Brown today?
I don't have the exact figure with me right now, but it's over 250, probably close to the 300. But that list is always changing. We're always reviewing new assets to list. Ultimately, our clients want the ability to buy in and out of a range of different assets. But yeah, as of today, it's probably around 250. And that's due to the fact that we can actually custody that in cold storage. So the clients that want to buy it through us, if they want to custody with us as well, we want to ensure that we can do that and that there's no counterparty risk of, say us holding it on an exchange. We don't want to do that. We want to hold it for clients ourselves in our partnership with Fireblocks. So yeah, it's about 250 or so today.
Okay. Have you listed or do you have plans to list Monad? I think I spoke to you about that a couple weeks ago. I know they
Yeah, so
just
I
launched
know.
on Coinbase.
Yeah, so I know Monad's just launched. There's probably a very good chance we will list it, if not already. I'd need to actually check. Maybe I can check right now and see whether it's one we listed. But yeah, Monad's one that we've been having an eye on, and I think yeah, as you said, I think TGE was not too long, a few days ago. So that's the benefit of us and actually having someone to speak to, is that you can actually speak to your broker and they can actually go through a token request to see if we can list it. And we'll never say no to doing that, right? There may be reasons why we can't list it, and there's a range of considerations that we take into effect. But we'll never go through the process of saying no to a client, and we'll always check to see whether it's something we can list.
Yeah, I assume. I know it's fresh out of TGE. So I know they had a bunch of backers, over $200 million. I think that those investors are getting their funds back or unlocks over the next 12 months. So I'm hoping we can see a nice market move.
Yeah, Monad's had a lot of hype. A lot of hype. I remember reading about it maybe 2 years ago. I was in the Discord at one point, but it's one of the more popular projects out there. So I'm not actually even sure how strong it's been doing from a price performance perspective, but hopefully the chain itself has a lot of users, because I think the use case is quite interesting for it.
Yeah, it hasn't done too much in price. I think it launched at like 2.5 cents. It went up a little bit and then crashed. But yeah, I'm definitely keeping my eyes on that one over the next year. Another one that I actually need to look into is Mega ETH, considering that Vitalik, backs it.
Yeah, so Mega ETH, I'm not sure if you saw the news. They essentially had done their pre-allocation, but there was an issue with how the multi-sig was done.
Oh no.
So they had to actually return all the funds. And I think they're going to redo it in terms of the pre-allocation. But yeah, probably not a great sign for that one. But
Thanks
yeah,
for
that
telling me.
also had
Yeah.
a lot of interest. Yeah, they had an issue with, I think there
Glad I
was
missed out
4
then.
multi-sig signatures for it, and then it allowed them. I think what it did was once they all had signed, it allowed anyone to actually raise the cap because they had a cap on pre-allocation, and so I think they just essentially messed up their pre-allocation format and mechanism, so they had to return all the funds. Ultimately, I don't think that'll necessarily be the make or break of the overall project, but it's probably not the best sign in terms of how they've done things, at least at this stage.
Yeah. We'll finish up shortly, but let's talk a little XRP.
Let's do it. What do you want to talk about?
I'm trying to think. I guess I'm thinking about price action. I know that they've had a bunch of recent acquisitions with G Treasury, and I know Brad Garlinghouse said they're going to be entering that $120 trillion corporate treasury market. Got things going on with Evernorth as well with Ashish Burla. So I'm
Yep.
hoping that that SPAC is successful because I want to see more demand to XRP. I guess I'm trying to think best case and worst case because prices haven't done much. I know XRP was 50 cents last November, but it's just been a very, I guess, boring year. And I'm trying to consider Ripple's valuation. I know that XRP price doesn't necessarily affect that, but I guess I'm just trying to think. With price action as things are changing, is Bitcoin going to remain the king? Are we going to see another alt season in the next year? Will we see QE? Or is this cycle just broken and we're actually going to see another bear market? I don't necessarily buy that we're going to see another few years of that, but that's not financial advice. I don't know the future related to tariffs and all the macro events. But overall, yeah, just interested in it.
Yeah, I think ultimately XRP, from like a Ripple acquisition perspective, and I've said this before, they're being super active. So they are taking a lot of steps to get exposure in a range of different areas within crypto. Probably stablecoins, the biggest one that they're looking to become a big player in. So from that alone, I think there's a lot of activity occurring, but that doesn't necessarily, as you said, correlate to price performance of XRP itself. And ultimately that will be more relevant when it comes to adoption of XRP and the actual use cases themselves itself moving forward. I think XRP will be beholden to the overall market in general, much like a lot of other altcoins. As you said, if we see QE, we see Bitcoin start to rise again, that then can lead to an eventual altcoin season that I think XRP can do really well in. If we see, as you said, all it will take is for Trump to come out tomorrow and impose new tariffs on, say, China, and the whole market will dump, and XRP will be included in that. So much like every other asset, as much as we'd like to think of XRP as its own unique crypto, which it is in a lot of ways, it's still very much beholden to what's happening on the macro environment. And that's certainly more the case now that it has, CME futures, it has ETF exposure now. It's very much financialized like the other products that we discussed. But I think, as you said, Evernorth is a very interesting SPAC that, plans to become one of the largest, if not the largest treasury for XRP. But also, again, we're starting to see MicroStrategy start to have a bit of fun around that as well. So whether that massive treasury fund strategy actually works long term is probably remains to be seen. But there's no doubt that that's over, what is it, millions and if not billions of inflows now coming into holding XRP long term, with people that are very much involved in the XRP and Ripple ecosystem, as you said. So I think there's still a lot to be positive about with XRP, but I think it would be remiss to think that it's unique in the sense that it won't be impacted by the rest of the market if we go into a downward trend or a bear trend. But also
Right.
that means, if we don't and we go the other way, I think XRP, probably just because of its support and its interesting use case, can probably outperform other altcoins if we do go the other way and we do get QE as well. So again, just something for all investors to be aware of. and to probably have your set targets in both environments and possibilities.
In crypto, I'm just always emotionally prepared for either a huge pump, nothing, or a 90% crash. I mean, since 2017, that's been the story. So, no, whatever I hold or invest, it's money I don't need. It's kind of money I just forget about. I'm not using bills to buy crypto. But there's just been so much news, and Evernorth is planning to, I think, raise $1 billion in proceeds with everything going on. But as far as I'm concerned, looking at XRP or a variety of assets, the correlation of XRP when Bitcoin dominance crashes. You go to the chart, you look at the last two alt seasons when Bitcoin dominance crashed, and you plot the dates. Those are the times when XRP saw the highest rate of return. So that's me
Yeah.
just sitting back, watching Bitcoin dominance, doing absolutely nothing, and waiting for that crash.
Yeah. And I think part of that is, like, as you said, there's almost like two different scenarios or even three that investors probably have to be across. There's ways in which you can limit your downside and make sure that you're experiencing upside if it occurs by setting up things like targeted sell orders. So as we said, if you looked objectively at XRP and the price it was last November to now, it's been still an amazing investment, probably one of the best you could get in market. But ultimately, it's important to understand that, okay, what is the price that I'm probably comfortable with that I would sell at if it continues to draw down, to at least lock in profits if you're one of those people that invested at some point last year. While also, on the upside, you can still have that exposure, and maybe you have more targeted sell orders on the way up. So you're still experiencing, the potential upside, but you're also not selling all at one go. So I think you can limit the downside while also still experiencing the upside. It's about just setting up a clear market strategy and probably factoring in that right now we could go into a bear. We could just be in a state of drawdown, and we're actually going to see a really strong 2026 ahead. We're probably at that crossroads. So I think as an investor, it's really important to at least have some sort of strategy for both environments and to be flexible in terms of your mindset. And that's easier said than done. Like, I'm speaking from personal experience. I'm holding a lot of ETH currently, and I'm still unsure as to where we're at in the market, and whether I do just sell out of my position, or look to still hold, thinking that there's still upside potential. Ultimately, as Kevin said, none of us actually know. I wish we did, but I think I have strategies for both in mind, around what I would sell at as a worst possible result, but also if it does go the other way and performs really well, where are my staggered sells on the way up, so I'm still taking profits on the way up.
Yeah, what I like about Calvin Brown is, based on your order books and all the market makers and partners you guys have, or liquidity providers, you can set really low buy orders or limit buys as a just in case. Because in this environment where we're seeing these cascading liquidations, you never know which market makers or exchanges are going to have a really low flash wick. So being able to potentially fill that buy, that's something I do, not currently, but is sometimes with an asset I like, set a really low buy limit as just in case if we get that flash wick, or vice versa with like a sell limit.
Yeah, absolutely. And look, speaking from a recent experience in the October 10 mass liquidation event of about 19 billion, we had a lot of people that had XRP at a really low price as a target order, and it actually got fulfilled. I know that other platforms had downtime, and a lot of them actually didn't even let you log in to do trades. So we had all hands on deck, all brokers. It was a Saturday morning um, here in Australia, and every single broker was online. I was online. But a lot of people were able to get in at really great entry levels as well. So that's probably the other element that I didn't touch on. That if you're someone that feels like you don't have tons of exposure, there also could be a really great period of time where you can get Bitcoin for sub 80K, 75K, 70K. That could actually be a really good buy. I'm just speaking from my own personal experience. I probably feel a bit too over leveraged to this space currently. But certainly, look, when everyone else is fearful, that's often at times to be greedy. So certainly not financial advice, but I think there's, if you're someone that has capital on the sidelines and you're waiting for the right moment, it can be a very exciting space as well to see how the market performs in December and early into January. I think we'll learn a lot through this month. It's been super volatile, probably the most volatile 3 or 4 days I've seen consecutively. Like, one day the market's down 7%, it's up 8% the next day. So I think we're going to see a lot we're going to get a clearer picture towards the end of December around where we're actually headed to in terms of into 2026.
Yeah, I'm interested to see how that Fed meeting goes. I'm not sure if you said December 9th. I do hope we get that small rate cut. But no, I've been on other exchanges and you're not even able to set, low buy orders or, low or high sell limits because the order book depth or they just don't allow you to. So I definitely like your guys' flexibility.
Yeah, and I think that's a big thing for anyone that's listening to this either live, and I'm happy to take any questions on what we do or after the fact. It's just really valuable to have options in this space, especially when there are volatile days. And unfortunately, we've seen it time and time again where other platforms have downtime or for whatever reason you can't access your assets. With us, and why it's so unique and special is that you get your own dedicated broker and you can execute trades yourself through our portal or your mobile app, but you can also execute trades through email. And email is as trusty as they come. So during those flash crashes, and we even saw when Amazon had some downtime a few weeks later and people couldn't log into any account with a two-factor authentication, we still had clients that executed trades because they were just able to email their broker to get the trade done, and we were able to execute that within the minute for them. So I think it's really valuable to have flexibility and have different options in the market. If you're, say, you have a trusted exchange that you usually use for most things, you still want to have other options out there available to you, especially one that's reliable and has a personal touch. Because if there is downtime with that trusted exchange and you're trying to make a quick trade, that's where you can start to feel like you don't have options available to you. So I think that's one of the key benefits of using CMB. It's why I use it more than any other platform out there. But even if you're someone that has a trusted and preferred exchange, it's really valuable in this space to have diversification of options.
If you enjoyed this video, be sure to smash the like button and let me know your thoughts down below. You can find all links to my crypto resources, including tools for charting, trading bots, wallets, portfolio trackers, and exclusive discounts right in my link tree in the video description. Thanks for watching, and I'll catch you in the next one.